Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Nabila, and today I will present about the background of company for Bermaz Auto Berhad. So on 11 May 2010, Bermaz Auto Berhad was incorporated in Malaysia as a private limited company under the name Fiscal Start Sendian Berhad. The name Berjaya Auto Sendian Berhad was assumed on 14 February 2011 and was subsequently converted into a public company on 11 July 2011. So on 18 November 2013, Bermaz Auto was listed on the main market of Bursa Malaysia Securities Berhad. After that, on 11 October 2016, Bermaz Auto Berhad had announced its change of name to the current Bermaz Auto Berhad. Bermaz Motor Sendian Berhad, a wholly owned subsidiary of Bermaz Auto, commenced operation on 1 April 2008 after Bermaz. Mazda Motor Corporation, which is Mazda Japan, entered into a distribution agreement on 28 February 2008, in which Mazda Japan awarded Bermaz as the distributorship of specific models of Mazda CBU vehicles, spare parts, accessories, and tools in Malaysia. Bermaz also operates in the Philippines. Bermaz Auto Berhad is industry of auto and truck manufacture, where the company involved with two core businesses, which is distribution and retailing of Mazda vehicles, and secondly is provision of after-sales services for Mazda vehicles. In the Philippines, the distribution of Mazda vehicles and spare parts is undertaken by its subsidiary, which is Berjaya Auto Philippines, through appointed dealers. Bermaz operates overseas 3S, which is sales, spare parts, and after-sales services, and approximately 32S, which is spare parts and after-sales services centers, and a body and paint repair center. The company has 73 centers operated by appointed third-party dealers nationwide. So the next is the balance sheet for Bermaz Auto Berhad for the year 2018 and 2019. So based on the balance sheet, the total asset in 2019 is higher than the total asset in 2018. This shows that the company have more asset that can be converted into cash in 2019 more than in 2018. The total debts of the company is also lower than the total asset. When total assets are more than total liabilities, it shows that the company have its resources to fulfill its obligation. However, there is an increase in the amount of non-current liabilities from 2018 to 2019 and a decrease in current liabilities in 2019 compared to in 2018. The amount of net equity funds is increasing from 2018 to 2019, while the amount of non-controlling funds by shareholder decreased from 47,741 ringgit to 45,280 ringgit. However, the total equity is still increasing from 524,504 ringgit in 2018 to 609,843 ringgit in 2019. So in conclusion, the balance sheet in 2019 is better than the balance sheet in 2018, which shows the company have good performance in their businesses. Lastly is the income statement for Bermaz Auto Berhad for the year 2018 to 2019. So based on the income statement, the company make higher revenue in 2019 compared in 2018. After deducts with the cost of sales, the company gains higher gross profit in 2019, which is 458,593 ringgit compared in 2018. After the company have deduct with some expenses such as selling and distribution expenses and administrative expenses, the company get profit before tax, which is in 2019 is higher than in 2018. The income tax expenses is increasing from 2018 to 2019. After it had deduct with the income tax, the profit tax for the year in 2019 is 266 ringgit 266,796 ringgit, higher than in 2018. Overall, based on the income statement, Bermaz Auto Berhad from 2000 gaining profit in 2019 more than in 2018 for their businesses.
Assalamualaikum warahmatullahi wabarakatuh. My name is Farhaiti binti Mansur. So now I will continue to present about trend analysis for Bermaz Auto Berhad. Here we use trend analysis because we want to compare the performance of Bermaz Auto Berhad from the year of 2018 to 2019. Okay, first we go to the liquidity ratio. Okay, basically, liquidity ratio is to measure the company working capital and their ability to pay for short-term obligation. Okay, the first one is current ratio. From the graph, you can see in 2019 it's higher than 2018, which is 2.5 times in 2018 and increased to 2.79 times in 2019. So it means that the Bermaz Auto Berhad has more current asset to pay for their current liability and they are able to meet their short-term obligation. The next, from the graph quick ratio, it shows that in 2019, it has it's higher than 2018, which is 1.52 times in 2019 and increased 1.62 times in 2019. Meaning that the company has more current asset without considering inventory and prepaid expenses to pay their current liability, and they still can able to meet their short-term obligation. For the last one is net working capital. From the graph, it also shows that in 2019, it's higher than 2018, which is 392,825 ringgit in 2018 and increased to 415,655 ringgit in 2019. So from this we can see that the company has sufficient margin of safety due to more amount of their current liability. The second ratio is activity ratio. For the first graph is average collection period. As we can see, it become decreased from the year of 2018 to 2019, which is 18 days in 2018 but only 14 days in 2019. So meaning that the company is efficient in collecting their credit sale in short period. For the turnover inventory, the graph shows that in 2019, the company has higher inventory turnover compared to 2018, which is 6.69 times in 2018 and increased to 7.26 times in 2019. Meaning that the company is efficient in using their inventory to generate their sales. For the third graph, it shows in 2019, the company has lower fixed asset turnover compared to 2018, with 10.13 times in 2018 and decreased to 9.51 times in 2019. So you can see that the company is not efficient to generate high sales with small amount of their investment on fixed asset. For the last graph, it shows in 2019, the company has higher total asset compared to total asset turnover compared to 2018, with 2.34 times in 2018 and increased to 2.6 times in 2019. So you can see that the company is efficient to managing all their assets to generate sales. For the third ratio is leverage ratio. For the first one is debt ratio. The graph shows that in 2019, the company is less compared to 2018 with 38.42% in 2018 and become decreased to 36.68% in 2019. Okay, this means less of company assets are financing by debt and they have low financial risk. Okay, for the debt equity ratio in 2019, the graph shows that um, 2019 is higher than 2018, which is 0.12 times in 2018 and increased to 0.17 times in 2019. So from this, we can see that the high amount of firms' capital are from their borrowing. Lastly, time interest earned. The graph shows in 2019 is higher than 2018 with 32.15 times in 2018 and increased to 417.01 times in 2018. So meaning that the company um, has high ability to pay for interest payment and they have enough margin of safety. That's all from me. Thank you.
Hi, my name is Muhammad Lukman bin Abdul Aziz. Okay, next I will explain for profitability ratio and market ratio. First, what we have in profitability ratio, we have gross profit margin. As you can see in the graph, the graph reading is increased from 2018 to 2019, which is in year 2019. The company has better gross profit margin compared to year 2018. In year 2019, it indicates that the firm able to generate more profit, which 18.2% after deducting direct cost from its sales compared to year 2018, which only 16.97% only. Okay, next we move to operating profit margin. As you can see in the graph, the graph reading also increased from 2018 to 2019, which is year 2019. The company has better operating profit margin compared to year 2018. In year 2019, the firm gains more profit, which 11.55% after deducting direct and indirect costs compared to year 2018, which only 9.10%. Okay, for third ratio, which is a net profit margin, as you can see in the graph reading show the increasing, which from 2018 to 2019, which is the year 2019, the company has better net profit margin compared to year 2018. In year 2019, the firm making higher profit, which is 10.59% after deducting all costs compared to year 2018, which only 7.58% only. The next ratio, we have return on asset. So as you can see in the graph reading is increasing, which in year 2019, the company has better return on asset compared to year 2018. In year 2019, the firm able to generate high profit from its investment in total assets, which is 27.57% compared to year 2018, which only 17.72%. And last but not least, we have return on equity. So as you can see in the graph reading is increasing also. So in year 2019, the company has better return on equity compared to year 2018. In year 2019, the firm able to pay more profit to its shareholders from their investment, which 43.75% compared to year 2018, which only 28.78% only. Okay, that's all for profitability ratio. Then we move to the next ratio is market ratio. So what we have in the market ratio, first we have earning per share. As you can see in the graph reading is increasing from year 2018 to year 2019, which is the company has better performance of earning per share in year 2019 compared to year 2018. In year 2019, the firm has more earning, which is 78 ringgit point 17 cents that can offers to investors for each shares invested compared to year 2018, which is in year 2018 they can provide to the shareholders only 67 ringgit 54 cents. Okay, for the second ratio we have price earning ratio. So as you can see in the graph reading is show decrease. So which in year 2019 the company has a low performance compared to the year 2018. In year 2019, the investor willing to pay less money per ringgit Malaysia of current earning, which is 0.02 times compared to year 2018, which has better price earning ratio, which is 0.03 times. Okay, for the third ratio we have dividend payout ratio. As you can see in the graph reading is increasing from 2018 to 2019. In year 2019, although Bermaz has high percentage of profit, which is 68.53% for dividend payment, and be able to pay more dividend to shareholders compared to year 2018, which only 65.43%. And last but not least, we have book value per share. So as you can see in the graph reading is increasing from year 2018 to year 2019, which is in year 2019 the company Auto Bermaz Berhad has better performance of book value per share compared to year 2018. In year 2019, the company has high book value per share outstanding, which 283 ringgit 51 cents compared to year 2018, which only 234 ringgit and 68 cents. That's all from me. Thank you.
Assalamualaikum. My name is Nur Afrina. So, I will explain about comparative analysis for the year 2019 between Bermaz Auto Berhad and Cycle and Carriage Bintang Berhad. So, for the first liquidity ratio, the current ratio for the company Bermaz has 2.79 times compared to competitor Carriage Bintang Berhad, that is 1.31 times. As we can see at the graph, Bermaz Auto Berhad has higher ratio compared to Cycle and Carriage Bintang Berhad. The firm has more current asset to pay for its current liability and able to meet its short-term obligation compared to Cycle and Carriage Bintang Berhad. Second, for quick ratio, Bermaz Auto Berhad has 1.62 times compared to Cycle and Carriage Bintang Berhad, that is 0.36 times. At the graph, we can see Bermaz Auto Berhad has higher quick ratio compared to Cycle and Carriage Bintang Berhad. The firm has more current asset without considering inventory and prepaid expenses to pay for its current liability. and the company still able to meet its short-term obligation. Okay, for the third ratio under liquidity ratio, that is net working capital, Bermaz has 450,655 million compared to cycle and carriage, that is 118,428 million. So Bermaz Auto Berhad has higher net working capital compared to cycle and carriage Bintang Berhad. The firm has sufficient margin of safety due to more amount of current asset and current liability to cycle and carriage Bintang Berhad. For the second ratio, that is under activity ratio, first average collection period or ACP, Bermaz have 14 days compared to cycle and carriage, that is 30 days. So as we can see on the graph, Bermaz has lower average period compared to cycle and carriage Berhad. Bermaz is efficient in collecting its credit sale in short period compared to cycle and carriage Bintang Berhad. Second, inventory turnover or ITO. Bermaz has 7.26 times compared to carriage, cycle carriage Bintang Berhad, that is 3.18 times. So at the graph we can see Bermaz has higher ratio to compared to cycle and carriage Bintang Berhad. The firm is efficient in using its inventory to generate sales compared to cycle and carriage Bintang Berhad. Third, under activity ratio, that is fixed asset turnover, Bermaz has 9.51 times compared to cycle and carriage, that is 4.59 times. So at the graph we can see Bermaz Auto Berhad has higher fixed asset turnover ratio compared to cycle and carriage Bintang Berhad. The firm is efficient to generate high sales with small amount of investment of fixed asset compared to cycle and carriage Bintang Berhad. And the last for under activity ratio, that is total asset turnover, Bermaz has 2.60 times compared to cycle and carriage, that is 1.53 times. Bermaz Auto Berhad has higher total asset turnover ratio compared to cycle and carriage Bintang Berhad. The firm is efficient in managing all assets to generate sales compared to cycle and carriage Bintang Berhad. Third, for the leverage ratio, our company Bermaz Auto Berhad has 36.98% compared to our competitor cycle and carriage Bintang Berhad, that is 99.95%. For this debt ratio, we can see on the graph, Bermaz Auto Berhad has lower debt ratio compared to cycle and carriage Bintang Berhad. The firm has less of firm's asset, debt, financing by debt, and have low financial risk compared to the competitor company, cycle and carriage Bintang Berhad. Second, for the debt to equity ratio, our company Bermaz Auto Berhad has 0.17 times compared to the competitor 0.5 times. We can see at the graph, Bermaz Auto Berhad has lower debt to equity ratio compared to Cycle and Carriage Bintang Berhad. Our firm has low amount of capital from borrowing compared to Cycle and Carriage Bintang Berhad. That is from me, Afrina. Next, I will pass to my friend Shamimi Najwa for the rest of the ratio. Thank you.
The last one for leverage ratio is time interest earned. Time interest earned for Bermaz Auto Berhad is 417 times, while for the Cycle Carriage Bintang Berhad is negative 3.11 times. So as we can see on the graph, it shows that Bermaz Auto Berhad has good performance and higher ratio compared to Cycle Carriage Bintang Berhad. So meaning that Bermaz Auto Berhad ability to pay interest payment and has enough margin of safety compared to Cycle Carriage Bintang Berhad. Next is profitability ratio. The first one is gross profit margin. Gross profit margin for the Bermaz Auto Berhad is 18.2%, while for the Cycle Carriage Bintang Berhad is 0%. The reason why Cycle Carriage Bintang Berhad gets 0% because they doesn't provide any cost of goods sold, so we need to put them as a 0%. So as we can see on the graph, it shows that Bermaz Auto Berhad has higher ratio and good performance compared to Cycle Carriage Bintang Berhad. Bermaz Auto Berhad able to generate more profit after deducting direct costs from each sale compared to Cycle and Carriage Bintang Berhad. The second one is operating profit margin. Operating profit margin for the Bermaz Auto Berhad is 11.53%, while for the Cycle Carriage Bintang Berhad is negative 4.57. As we can see on graph, it shows that Bermaz Auto Berhad has higher ratio and good performance compared to Cycle Carriage Bintang Berhad. So meaning that Bermaz Auto Berhad can get more profit after deducting direct and indirect costs to Cycle Carriage Bintang Berhad. The third one is net profit margin. Net profit margin for the Bermaz Auto Berhad is 10.59%, while for the Cycle Carriage Bintang Berhad is negative 3.43%. So as we can see on the graph, it shows that Bermaz Auto Berhad has higher ratio and good performance compared to Cycle Carriage Bintang Berhad. So this is mean that Bermaz Auto Berhad can get higher profit after deducting all costs compared to Cycle Carriage Bintang Berhad. The fourth one is return on investment, or we call it as a return on asset. Return on investment for Bermaz Auto Berhad is 27.57, while for the Cycle Carriage Bintang Berhad is negative 5.25%. The reason why we got Cycle Carriage Bintang Berhad is negative because the profit after tax is negative. So as we can see on the graph, it shows that Bermaz Auto Berhad get higher ratio and good performance compared to cycle carriage bintang berhad. So meaning that Bermaz Auto Berhad can generate higher profit from investment in total asset compared to cycle carriage bintang berhad. The last one for profitability ratio is return on equity. Return on equity for Bermaz Auto Berhad is 43.75%, while for the cycle carriage bintang berhad is negative 15.74. The reason why we got cycle carriage bintang berhad negative because profit after tax as negative 2. So as we can see on the graph, it shows that Bermaz Auto Berhad has higher ratio and good performance compared to cycle carriage bintang berhad. So meaning that Bermaz Auto Berhad can get more profit to shareholder from their investment compared to cycle carriage bintang berhad. The last ratio is market ratio. The first one is earning per share. Earning per share for Bermaz Auto Berhad is RM78.71, while for the cycle carriage bintang berhad is negative 0.93 sen. So as we can see on the graph, it shows that Bermaz Auto Berhad has higher ratio and good performance compared to cycle carriage bintang berhad. Meaning that Bermaz Auto Berhad can earn more earnings that can offer to investor for each share compared to cycle carriage bintang berhad. The second one is price earning ratio. Price earning ratio for Bermaz Auto Berhad is 0.02 times, while for the cycle carriage bintang berhad, we doesn't get any price earning ratio because they doesn't provide market per share on the annual report. So as we can see on the graph, Bermaz Auto Berhad has good performance and higher ratio compared to cycle carriage bintang berhad. So meaning that Bermaz Auto Berhad willing to pay more money of RM of its current earnings compared to cycle carriage bintang berhad. The third one is dividend payout ratio. Dividend payout ratio for Bermaz Auto Berhad is 68.53%, while for the cycle carriage bintang berhad, we got 0%. The reason why cycle carriage bintang berhad 0% is they doesn't declare any dividend of that time. So as we can see on the graph, it definitely Bermaz Auto Berhad has high ratio and good performance compared to cycle carriage bintang berhad. So meaning that Bermaz Auto Berhad has high percentage of dividend payment and able to pay more dividend to shareholder compared to cycle carriage bintang berhad. The last one is book value per share. Book value per share for Bermaz Auto Berhad is RM78.68, while for the cycle carriage bintang berhad is RM2.48. As we can see on the graph, it shows that Bermaz Auto Berhad has good ratio and good performance compared to cycle carriage bintang berhad. So meaning that Bermaz Auto Berhad has high book value per share ratio compared to cycle carriage bintang berhad.
Assalamualaikum. My name is Nurul Marhana binti Damanhuri and I will present you about the conclusion and recommendation. For the conclusion, according to the trend analysis of Bermaz Auto Berhad between the year 2018 and 2019, the firm shows good performance in its liquidity and its profitability ratio. Well said, the company is excellent in managing its assets to pay its short-term obligation, and the firm are able to generate high profit from its operation. Thus, due to the excess amount of current asset, which is more than the amount of current liability, the company has developed a sufficient margin of safety for its business operation. The company also has a good performance for its activity ratio, which are average collection period, inventory turnover, and total asset turnover. However, for the fixed asset turnover, it indicates that the firm is not efficient in generating high sales due to the small amount of investment on fixed assets. Next, the debt ratio and time interest earned by the firm for the leverage ratio shows a positive result from previous year. Even so, the debt to equity ratio shows the opposite. This is because most of its capital comes from borrowing, which means that the firm and its shareholders will receive less profit as the firm has to pay high interest payment from that borrowing. Lastly, the firm's market ratio is on the right track for earning per share, dividend payout ratio, price earning ratio, and book value per share. So, in conclusion, the trend analysis for Bermaz Auto Berhad shows a great efficiency and the firm is well functioning. Okay, now I will explain about the recommendation to the company on how to improve the company's performance in the future based on the financial ratio analysis. Okay, first is regarding the fixed asset turnover. Bermaz Auto Berhad has low fixed asset turnover, which indicate that the firm is underperforming in sales. Therefore, we recommend that this firm to liquidate its asset and improve efficiency. The firm need to have proper asset plan which deal with purchase and sales of assets strategically. Obsolete assets should be sold quickly, as they are no use to the contribution to sales and only make the balance sheet look poor to the stakeholder. Assets frequently used should be regularly maintained in a scheduled manner, while on the other hand, assets that are not frequently used should be decided by the firm whether to discard, replace or repair the asset. Next is regarding to the debt to equity ratio. Based on the trend analysis, we can see that the firm has high debt to equity ratio in 2019 compared to the previous year. Therefore, Bermaz Auto Berhad should reduce its debt to equity ratio by applying these several strategies, such as increase their revenue. This can be achieved by raising its product price, increasing the sales or reducing the cost. The extra cash generated can then be used to pay off existing debt. The other way is that the firm should apply an efficient and effective inventory management. Inventory can take up a very sizable amount of firm's working capital. Maintaining unnecessarily high levels of inventory beyond what is required to fill customers' order in a timely fashion is a waste of cash flow. Bermaz Auto Berhad can examine the days sale of inventory to determine how efficiently inventory is being managed. Other than that, the firm should restructuring its debt. This will reduce the interest expenses and monthly payment while improving the company's bottom line profitability and its cash flow and increasing its stores of capital. Okay, now is the recommendation to the potential investor whether they should invest or not on this firm. We recommend that to the potential investor to invest in this firm. This is because the firm has high liquidity and profitability ratio, thus perform good in its leverage ratio. Based on Bermaz Auto Berhad's liquidity ratio, potential investor can see that the firm are able to quickly repay its debt. This also shows how well its asset can cover the expenses. Thus, this liquidity ratio can give investor an idea of this firm's operational efficiency. It also shows how quickly and easily the firm can generate cash to purchase additional asset or to repay creditors quickly, either in an emergency situation or in the course of normal business. Second, Investor will analyze profitability ratio as a key aspect when considering to invest in a company. Therefore, as shown in the Bermaz Auto Berhad financial ratio analysis, we know that all ratio calculated under profitability shows an excellent positive result. This profitability ratio help provide insight into how much profit this firm generates and how that profit relates to other important information about the firm. This can be used by the potential investor to assess this firm's ability to generate earning relative to its revenue, operating costs, balance sheet asset, and shareholder equity over time. Third reason is the firm's leverage ratio indicates a good performance aside from the debt to equity ratio. Based on this ratio, the investor can see that the firm are able to deal with its long-term financial obligation. As they might expect, the firm is favorable investment as it has minimal amount of debt on its book.